Hi, I'm Vipul Mittal, and in this session, I will discuss what you should do when you identify a fraud or you suspect a fraud. So, you are the auditor and you are auditing the financial statements, and you have to be reasonably sure that the financial statements are free from material misstatement, whether due to fraud or error. But it is not your job to prevent or detect fraud. You may identify a fraud, you may suspect a fraud. Now, if you identify a fraud or you suspect a fraud, what you should do? If the auditor has identified a fraud or has obtained information that indicates that a fraud may exist, I'm talking about suspected fraud. Section 240 is talking about fraud identified or suspected fraud. If the auditor has identified a fraud or has obtained information that indicates that a fraud may exist, the auditor should communicate these matters on a timely basis to the appropriate level of management. Communication responsibilities we are talking about. So communicate those instances of fraud or suspected fraud to management, inform them timely. But if management is involved in fraud, also inform those charged with governance. Also inform those charged with governance if management is also involved. Inform those charged with governance if those who have significant role in internal control, employees who have significant roles in internal control are also involved. Inform those charged with governance if fraud results in material misstatement. If there is a material misstatement due to fraud, inform those charged with governance. So if management is involved or employees with significant roles in internal control, they are involved in fraud, or there is a material misstatement due to fraud, inform those charged with governance, inform board of directors, inform audit committee, inform them. Now, what about communication of fraud to enforcement authorities or regulatory authorities? So there may be a legal responsibility to inform enforcement authorities. There may be a professional responsibility to inform regulatory authorities. Then inform regulatory authorities, inform enforcement authorities about the instances of fraud. But here you have to be a little careful because you have a duty to maintain the confidentiality of client information. So you have a duty to maintain confidentiality of client information. So this stops you from reporting fraud to any person or party outside the entity because you have a duty to maintain the confidentiality of client information. This stops you from reporting fraud to parties outside the entity, including regulatory authorities. But in most of the cases, this duty of confidentiality is overridden by law, by regulations, by statute. by specific audit requirements. So on one hand, there is a duty to maintain the confidentiality of client information, and that stops you from reporting fraud to a party outside the entity, including enforcement authorities. On other hand, you have a legal responsibility, professional responsibility to report such instances to regulatory authorities. And in most of the cases, this duty to maintain confidentiality of client information is overridden by law. You may consider taking legal advice to determine what is the right course of action, whether I should report enforcement authorities or not. You can take legal advice. Now, other than communicating to management and those charged with governance and enforcement or regulatory authorities, you may decide to withdraw. Let's discuss that. So, you may decide to withdraw from the engagement. And when do you decide that, or you may consider withdrawing? So, if there is a question mark on your ability to continue performing the audit, then you may consider withdrawing. So, there may be circumstances that really question your ability to continue the audit. If there are circumstances that bring into question the auditor's ability to continue the audit, then the auditor may have to withdraw. So you are the auditor and you may consider withdrawing if there are such circumstances. For example, you identify instances of fraud and you ask management and those charged with governance to take appropriate action regarding this. But management and those charged with governance do not take that action. And you consider it necessary under the circumstances. You may consider withdrawing from the engagement. I give you another example. When you may consider withdrawing, there is pervasive fraud. So there is fraud in nearly every element of the financial statement. There is fraud in nearly every aspect of the financial statements. The fraud is pervasive throughout the organization. There is fraud in recording revenues. There is fraud in recording expenses. There is inventory theft. Organization's property is used for personal use. Most of the elements of the financial statements are fraudulently misstated. Fraud is pervasive. You may consider withdrawing. You may consider withdrawing if you have concerns regarding integrity of management, competence and integrity of management and those charged with governance. You may consider withdrawing. You may decide to withdraw from the engagement. All right. So if you identify a fraud or suspect a fraud, then you have certain communication responsibility. You should inform management. If management is also involved, inform those charged with governance. You may have to inform enforcement authorities. You have to be careful of your duty of confidentiality and may have to take legal advice that whether you should inform enforcement authorities or not. You may consider withdrawing also from the engagement, depending upon circumstances. All right, students, I hope this session was helpful. We'll connect again. Take care.